Ira Epstein of Linn Associates with your agriculture update, and this is for Monday the 26th of August 2019, getting on to 2:30 p.m. Central Daylight Time. So today we had the G7, and it was interesting as can be. You know, this has been going on for a few days now, and we heard talk about Japan and the U.S. reaching at least agreement on what a trade agreement's going to be like. Now they have to put the words in, but the market saw big rallies in the pork market because of that. A little bit of a rally in corn, not as much as you would think, because they said they were going to buy over 2 million metric tons of corn. Beans got a rally as at least the tone from President Trump towards President Xi of China toned itself down, and that's giving you a stock market rally. First you got up in the gold of 1565. You fell $30 off that high. Most of the markets all over the board. Now the thing to remember is this is a full week of trading, and then we have Labor Day off, and then gradually as you get into September it's full season trading, as I like to call it. Energy markets down a little bit today because France had called in, as you know, the Iranian foreign minister to the G7, and any talk that even something can get going, which I don't believe it will, but even that talk puts a little pressure because there'd be more oil on the market. When we look at soybeans, pretty hard to argue that the market's in anything on a closing basis on a weekly chart other than in a downtrend. The bias is down. It keeps making the pattern of lower highs, lower lows on a close. Certainly first day of the week, we were up 10 cents, and the market's got resistance, as I see it, the potential for it at 864, about 11 cents higher. When you look at a chart of November beans, I'm going to leave this downtrend line that I put on the chart in place. So far, it looks pretty valid. So we'll see what happens. You can almost see that this market formed a double bottom here and then back into here. Now, you could draw a line like that, but if the market breaks through it, be careful. That could be another bearish sign in that market. So something to just think about. When you take a look at the swing line study, you have a pattern of a higher high, right, and a lower low. So you don't have a sequence of a stair going down with the lower highs, lower lows, and you certainly don't have an uptrend where you're making higher lows, higher highs. You've got the opposite, no high, no low in sequence with each other. In terms of resistance, here's three key moving averages. The 200-day back at 918 3/4, 893 the 100-day average, and 872.5 the 18-day average. The 18-day average probably has the most play in it right now if the market wants to extend today's gain. Where did the market bounce from? So let's take a look. On Friday, you got down to the lower Bollinger Band. One of the things that I teach in my charting course, and you should take that if you want to learn about these things. And boy, by the way, today when I started, and I started at 5:30 this morning recording, 5:30 a.m., I said it was going to be Bollinger Day. And what I meant by that, if you understand Bollinger Bands and the financials in the other markets, today was the day on the first challenge, just like you did here on Friday, expect to bounce away from it. So if you're on the downside that way, if you hit the upside, expect the markets to break back. Market bounced up today. Okay, that just fits in with the theory that I've got on that. As you take a look at momentum, you're in an oversold market that has no trend, downside bias. When we come to the meal market, on Friday you got down, and again today, to the lower Bollinger Band. You kick back up. Resistance is the 18-day average of closes at $3 even. When I look at the market, I see an oversold condition in the oscillator called slow stochastics, which measures momentum. I see a market that's mostly sideways right here with downside bias. It is not trending because you have a higher high and a lower low pattern. The one market that is trending is the soy oil. It has the pattern of lower highs, lower lows. Now, if we take a look, the 100-day average back here was support. Then the market rallied, fell back within 3 or so days to the 100-day average, and that's all that you've done. So you're coming back into resistance. Let's assume the market gets up from here and gets through 29.32. it would still not be bullish because you'd have a lower low, higher high pattern. Let's assume the market gets under 28.53. That extends this pattern of lower highs, lower lows, and because the 100-day average is already out of the way, it could put into play a much lower price towards the lower Bollinger Band. When we come to the corn market, we can see first thing of importance, you have an embedded reading. Embedded means the momentum oscillator is locked in, and because it's under 20, locked in bearish. You still have the pattern of lower highs, lower lows. The market's working its way lower, but even if you have a big rally, unless the red line that's in this oscillator, and right now the value is 511 on it, unless it closes over 20, I say that the pros are waiting for rallies to sell in that market. In the wheat market, here you had lost the embedded reading. You can see this, and this was Thursday. You had the reading. You had both numbers there under 20, there under 20, there under 20, and so on. When you lose it, often, not the word always, often, it means the price and the 18-day average are going to make a run at each other. This is where you finished on Friday. Here's the 18-day average today. So what you've done is you've gotten a market that at this point at least has neutralized the bear trend, but it has not begun an uptrend. It could if prices were to close over that 18-day average, which it hasn't done yet. In the sugar market, we are still in a period of bearishness. We have lower highs, lower lows. Admittedly, you're in an oversold condition where momentum is flattened out and price is pretty well flattened out. We see the resistance at 1163, a move over 1165 and a settlement over that 1163 could turn the tide if you don't get under 1137. It could be higher lows, higher highs. So that's what the bears don't want to see. In the coffee market, here too, we had an embedded reading that was lost. Once it was lost here, this was Wednesday's action, I look for price in the 18-day average to make a run for each other. Now, we had some false periods right here where it tried it fell back, tried it, fell back. You don't keep falling back. A sign that you're embedded losing it eventually means the market's weakening what? The bearish resolve that it has. So when that happens, I'm just looking for price in the 18-day average to make a run back to each other. And pretty much that's what you did today. The swing line is up. The resistance is that 18-day average. A settlement over that could turn the market a little friendlier then, and maybe on short covering, you get up here to the 102.55 to 70 level. In the cocoa market, here too you lost an embedded reading. This is that's why I say all this is how it ties together. When you lose it and you lost it on Thursday of last week, often it means price in the 18-day average make a run. You wouldn't want to see a low under the most recent low that you made. The market got up and that's right what you've done. So you're into that resistance zone. Then we get to the cotton market, which went to the lower Bollinger Band today. Hit it at 57.30, that was the low, and you settled 57.82. I contend the pros took some money off the table. In the cattle market, we had a cattle on feed report that still shows that since 96, this is still for an August time frame, the most cattle on feed. But the market didn't respond in a super negative way. Instead, it went up and took out 101.45, putting into play now the pattern of higher lows and a higher high. You had an embedded reading back here that you lost. I wouldn't have, obviously, you got to be careful going through reports, and that's Thursday. Friday's action, the report came out, and this is what you're getting today. Don't be surprised if price and the 18-day average make a run at each other. I'm wrong in my thinking if you take out this most recent low. In the feeder cattle market, resistance right up at the 18-day average of closes, trend still down. Even if you get up and take out the last rally high of 135.92.5, you end up with a pattern of a lower low and a higher high, not a trend. Last, in the hog market, we had a bear market rally today. You had gotten down on Friday to the lower Bollinger Band. I'm going to repeat what I say. The first challenge of that, it doesn't have to be that exact day. You're in a zone where look for the market to bounce, and that's what you're getting out of it today. That's all it is, a zone. You haven't changed the trend. You're oversold as can be. resistance back at the 18-day average of closes. Now, one of the ways to find some of these points for these reversals is to see if the pivot point ties in with a Bollinger Band on the top or bottom side. Gives you some confidence of ideas that other traders are looking at something else that might tie in. The other thing I look at when I look at pivot points, and I've put together a 3-video series for you, and they'll look like this. The first video teaches you the formula and the concept, and you don't really have to do that. If you have a good charting service, it's going to do it for you. But you'll get to that white pivot point or whatever color you want to make it. I think you should use them like this. And the first resistance, back to the pivot. Support, back to the pivot potentially. But then I like to tie it together with momentum. And when you use the momentum with it, I find it gives you a little bit more confidence in the trade, whether it's a buy or a sell. Is it overbought, oversold? The videos say this a lot better than I do. So if you like them, they're free. All you need to do is go to our website, www.iraepstein.com. On the website, you'll see free offers. Click it. Choose the ones you want, and away you go. If you don't have a charting service that does these, well, you can always try one of ours as well. We have both a web-based and a Java. You can also click up here. If you're watching me on YouTube, it'll take you right to that page. I'm Ira Epstein. You have a great day, and I will see you all tomorrow.